Welcome to the deep dive. Today, we're getting right into a really interesting piece of financial intelligence. It's a Form S3 registration statement.
Yeah, just filed with the Securities and Exchange Commission.
Exactly. By Sable Offshore Corp, and it's dated April 22nd, 2025.
Right. And this Form S3, well, it's essentially Sable Offshore signaling, hey, we might want to offer some new securities for sale down the line.
Mm-hmm.
It's a pretty standard public filing, gives us a kind of roadmap of their potential fundraising activities.
Okay. And for you, the learner, our mission here is really to pull out the key info about Sable Offshore from this doc.
Yeah, who they are, what they're planning, the business side.
And the types of securities they might actually offer. We're aiming for those aha moments, trying to give you the essential understanding without getting bogged down in all the legal complexities.
Cutting through the jargon.
Exactly. Okay, so let's kick off with the basics. Who is Sable Offshore Corp?
Well, Sable Offshore Corp, they have a bit of a history. They weren't always called that. They started life as Flame Acquisition Corp. You might have heard of these kinds of companies. They're often called blank check companies.
Ah, SPACs. Right.
Exactly, SPACs.
Okay.
Special purpose acquisition companies. The whole idea is they raise money, go public, and then look for an existing private company to merge with.
Effectively taking that private company public through the merger.
Precisely. And for Sable, or Flame as it was, that merger happened on February 14th, 2024.
Okay, Valentine's Day. That's when Flame Acquisition Corp officially became Sable Offshore Corp.
Correct. And that same day, they also closed a pretty major acquisition.
Which was?
They acquired what are known as the Santa Ynez Unit assets. People call them the SYU assets.
SYU assets.
From ExxonMobil Corporation. Though the deal was effective retroactively to January 1st, 2022.
Got it. The Santa Ynez Unit assets. That sounds pretty significant. What exactly does that involve?
Oh, it's substantial. It includes 3 offshore oil and gas platforms. These are in federal waters off the coast of California.
Okay, offshore California. Interesting.
And besides the offshore stuff, they also got a big onshore oil and gas processing facility, plus a network of pipelines connected to it.
Wow. Okay, so offshore platforms, onshore processing, and pipelines. We should definitely circle back to those pipelines.
We should. There's a story there.
All right. So they're a public company now, right? Trading.
Yep. Their common stock trades on the New York Stock Exchange. Ticker symbol is SOC.
SOC.
And just for context, the closing price on April 21st, 2025, so just before this filing, was $19.38 per share.
Okay.
One other key thing, they're currently classified as an emerging growth company.
An emerging growth company.
Right.
What does that actually mean for them and for us trying to understand them?
Well, it means they get a bit of a break on some reporting requirements compared to bigger, more established public companies.
So potentially less detailed disclosure in some areas.
Potentially, yes. They have slightly less stringent rules. It's just something to, keep in the back of your mind if you're comparing their filings to, say, a huge integrated oil company.
Good point. Okay, so that's who they are, what they own. Now, this Form S3, what's the headline here? What are they actually planning to do?
The core purpose of this filing, this S3, is to register the possibility of offering and selling various securities.
Okay.
And the total aggregate amount they're registering is up to $1.5 billion.
$1.5 billion. That's a significant potential capital raise.
It really is.
Yeah.
Shows they might have some plans that need funding down the road.
What kinds of securities could make up that $1.5 billion? Is it just stock?
No, it's pretty broad. They've covered the bases. It includes their common stock, obviously.
Right.
Also, preferred stock, which is a different class of shares, usually with different rights.
Mm-hmm.
Then there are debt securities. Think of those basically as bonds, so borrowing money.
Okay.
And also warrants, which are like options to buy stock later, and even units.
Units.
Yeah, units are basically packages combining different types of these securities, like
Okay.
maybe a share of stock bundled with a warrant.
I see. So they're keeping a lot of flexibility in how they might raise money if they decide to.
Exactly. Maximum flexibility.
Do we get any sense from this S3 about when they might actually offer these or the specific details, like prices or amounts?
Not really, no. This S3 is more like a shelf registration. It sets the stage,
Okay.
the specific timing, the exact amounts of each type of security, the price, the terms, all that nitty-gritty stuff.
Yeah.
That will come later in a separate document. It's called a prospectus supplement.
Ah, okay. So we need to watch for those supplements if they actually decide to pull the trigger on an offering.
Correct. The main prospectus here just says they might offer securities from time to time. Very open-ended.
From time to time. Definitely gives them leeway. And how would they sell them? Through banks. Directly.
They list the usual methods. Could be through underwriters, the big investment banks.
Yeah.
Could be through dealers or agents acting for them.
Yeah.
Or they could even sell directly to purchasers.
Okay. Again, details TBD in the supplement.
Exactly. That supplement will spell out the plan of distribution for any specific offering.
Right. Let's circle back to those assets they bought from ExxonMobil, the Santa Ynez Unit. You said offshore platforms, onshore facility. What makes these assets stand out?
Well, starting offshore, Sable now holds 16 federal leases. That covers a pretty big area, roughly 76,000 acres,
Wow.
and they hold 100% working interest. That's key. They control the operations.
Okay. And the platforms?
3 main platforms. Hondo and Harmony, they develop the Hondo field. And then there's Heritage, which develops the Pescado and Sakit fields.
So established fields, existing infrastructure.
Definitely. And these aren't deep water giants. They're located between 5 and 9 miles offshore Santa Barbara County. Relatively shallow water, 900 to 1,200 feet deep.
Okay. And are they producing now? What's the well situation?
Well, that's tied into the pipeline story we mentioned. But in terms of wells, there are 112 wells drilled from these platforms.
112.
Yeah. Currently, the filing says 90 are producers, 12 are injectors used to, help push oil out, and 10 are idle. Okay.
But here's something really interesting. A previous analysis, back in 2015, identified potential for another 102 undrilled opportunities within these leases.
Over 100 more potential drilling spots.
That's what the analysis suggested. So considerable future potential there, if the economics and permits line up, of course.
Right. That definitely points to potential future growth.
Yeah.
Now, the onshore side, the processing facility, how big is that?
It's a significant piece of infrastructure. It's fully integrated oil and gas processing facility. Sits on about 4,480 surface acres, though the actual facilities take up maybe 35 acres.
Okay. And capacity, what can it handle?
It's built for scale. Oil treating capacity is around 180,000 barrels of oil per day.
180 MBUMet? Wow.
Yeah. Water treating is over 67,000 barrels per day. And the main gas plant, the POPCO plant, can handle about 80 million cubic feet per day for sales gas.
Those are serious numbers. What else is part of that onshore complex?
It's quite comprehensive. There's another gas processing plant, a cogeneration power plant, makes about 50 megawatts, helps power the operations. Self-sufficient power. Nice.
Big crude oil storage tanks, capacity for 540,000 barrels, pipelines for produced water, LPG storage and loading facilities, even a transportation terminal.
So it really is a fully integrated system, from platform to processing to storage.
Exactly. That integration is a key part of the asset value.
Okay, now, the pipelines. You mentioned there's a story. These assets included pipelines, right?
Yes. They acquired pipeline segments 324 and 325. Some people might know them by their old numbers, 901 and 903.
Okay, 324 and 325, what are they?
Line 324 is a 24-inch pipe, runs about 10.8 miles from the Los Flores Canyon facility to Gaviota. Line 325 is the bigger one. It's a 30-inch pipe. It goes 113 miles from Gaviota all the way to Pentland in Kern County with an intermediate station along the way.
That's a long pipeline. Now, these are the ones that had the issue back in 2015.
That's correct. These pipelines were shut down in May 2015. There was a crude oil release from line 901, which is now line 324, 325 system. They've been emptied since then.
Right, I remember that. So production from those platforms has been shut in since 2015 because the export route was down.
Essentially, yes. That's the critical context here. And it's why Sable's current activities are so important.
What are they doing?
They've been investing to safely restore production operations. A key part of that is getting these pipelines operational again.
Okay.
The filing mentions they actually started hydro testing these pipeline segments in early 2025.
Hydro testing. So pressure testing them with water to ensure integrity.
Exactly. Standard procedure before restarting a line like this.
Yeah.
And their stated goal is aiming for a potential restart of operations in the second quarter of 2025.
So potentially quite soon then.
Potentially. If everything goes according to plan with the testing and regulatory approvals, getting those assets producing again would obviously be huge for Sable.
Absolutely. That would be a major turning point. Okay, let's shift gears slightly. Thinking about potential investors or just people like us trying to learn, what are the key warnings or considerations in this S3?
Well, right up front, like in any prospectus, they have the standard boilerplate but crucial warning. Investing in our securities involves risks.
Always does.
And they point you directly to the risk factors section in their main annual report, the Form 10-K. That's always required reading.
Definitely. You can't ignore the risk factors. What else should we be aware of?
Well, the document is full of what they call forward-looking statements.
Ah, yes. The crystal ball gazing.
Sort of. It's where they talk about their expectations, beliefs, projections for the future. Things like production forecasts, financial outlooks, potential risks down the line.
And the key there is?
The key is that these are not guarantees. They're based on current assumptions, but reality can be very different. Lots of uncertainties involved.
So, read them, understand their thinking, but don't take them as gospel.
Precisely. And remember that emerging growth company status we talked about.
Yeah, the reduced reporting requirements.
That's another consideration. It could mean slightly less public information available compared to a larger, older company. So maybe a bit more homework required for due diligence.
Good reminder, less mandated disclosure might mean you need to dig a bit deeper yourself.
Okay. And what about the money itself? If they do raise some of this $1.5 billion, does the S3 say how they plan to use it?
Not in detail here. This initial filing is usually pretty general on the use of proceeds.
Okay.
It basically says the specific intended uses for the money raised from any particular sale will be described in it. You guessed it.
The prospectus supplement for that specific offering.
Exactly. So we'll have to wait and see if and when they do an offering to find out their precise plans for the cash.
Got it. Okay, let's talk about the securities themselves. The S3 gives some basic descriptions. Common stock. What are the highlights for SOC shareholders?
Pretty standard stuff for common stock. 1 vote per share.
Okay.
No cumulative voting for directors, which is common. If the board declares dividends, common stockholders get their proportionate share.
Makes sense. And if the company were ever liquidated, after everyone else gets paid, particularly preferred stockholders, if any exist, the common stockholders share what's left.
Right. Any special rights, like preemptive rights to buy new shares?
No. The filing states no preemptive rights, also no subscription, redemption, or conversion rights attached to the common stock itself.
Okay. So if they issue more stock, existing holders don't automatically get first dibs to maintain their percentage. What about preferred stock? You mentioned that's an option.
It is an option on the table. Preferred stock usually gets, well, preference, as the name suggests.
Preference in what way?
Typically in receiving dividends before common stockholders and getting paid out first if the company liquidates.
Okay.
Sable's charter allows the board to issue preferred stock in different series, and the board gets to decide the specific terms for each series. Voting rights, dividend rates, whether it can be converted to common stock, redemption features, liquidation preference, all that.
So the board has a lot of flexibility there. Are they planning to issue any soon?
Interestingly, the prospectus explicitly says they have no current plans to issue any preferred stock.
So they have the authorization, but no immediate intention. Okay. Moving on to debt securities, borrowing money through bonds. What does the S3 tell us?
It lays out the general framework.
Mm.
The real specifics, interest rates, maturity dates, things like that, those will be in a future supplement.
Of course.
It does mention they could issue debt denominated in foreign currencies that has complexity, tax considerations, etc.
Right.
And it covers the standard legal bits. What constitutes a default, what remedies holders have, the role of a trustee who represents the bondholders.
So the basic plumbing for issuing bonds is there, details to follow. What about warrants? How do those work?
Warrants are essentially options. They give the holder the right, but not the obligation, to buy other securities, common stock, preferred stock, maybe even debt securities.
At a set price for a set time?
Exactly. The exercise price and the expiration date are key terms, and those will be defined in a separate warrant agreement.
Okay. And do warrant holders get dividends or voting rights?
Generally, no. Not until they actually exercise the warrant and acquire the underlying stock. Until then, you just hold the option.
Got it. Like a call option, basically. And finally, units. You said they were packages.
Yeah, just combinations. A unit might be, say, 1 share of common stock plus 1 warrant, sold together as a single package.
Okay.
The specifics of what's in the unit would be detailed in a unit agreement if they offer them.
Right, a bundle deal. Okay, shifting from the securities to the company structure itself, anything noteworthy in the legal or structural details mentioned?
Well, they're incorporated in Delaware. Very common for U.S. companies.
And?
Principal executive offices are in Houston, Texas. The filing also details their authorized capital stock, how many shares of common and preferred they can issue.
Okay. Any governance features that stand out? Things like anti-takeover provisions.
Yeah, there are a few standard ones mentioned. They have a classified board.
Staggered terms for directors.
Exactly. Makes it harder to replace the whole board quickly in a takeover scenario. They also have advanced notification requirements for stockholders wanting to nominate directors or bring up business at meetings.
Right.
Stockholders can't act by written consent, meaning they have to hold formal meetings. And changing certain charter and bylaw provisions requires a supermajority vote.
So measures that could make a hostile takeover more difficult?
Potentially, yes. Pretty standard defenses, but worth noting.
What about protecting the officers and directors themselves? Liability?
Delaware law allows companies to limit director liability for certain breaches of duty, and Sable's charter does that.
Okay.
They also provide indemnification. Basically, the company covers legal costs and liabilities for directors and officers acting in good faith to the fullest extent Delaware law permits. And they can buy insurance for them, too.
Again, fairly standard for public companies. What about the legal framework for the debt? Which state's law applies?
They specified the state of New York law will govern the debt securities and the indenture agreement.
New York law, okay.
And interestingly, they include a waiver of jury trial and consent to jurisdiction in New York courts for related disputes, also common in these types of agreements.
Good detail. Lastly, the filing mentions the Depository Trust Company, DTC. What's that about?
DTC. It's the central plumbing for holding and transferring most U.S. securities electronically.
So, no paper stock certificates?
Mostly not, especially initially. Securities are held in book entry form within the DTC system. Ownership is tracked electronically through brokers and banks who are DTC participants. Makes everything much more efficient.
I see.
The filing also mentions Euroclear and Clearstream, which are similar systems for international clearing and settlement.
Right, for overseas investors. Okay, wow. That was definitely a deep dive into this S3 filing. Let's try to pull it all together. Key takeaways.
Okay. So Sable Offshore Corp, relatively new name, came from a SPAC merger.
Yeah.
Acquired significant existing oil and gas assets at the Santa Ynez Unit off California from ExxonMobil.
Platforms, processing, pipelines.
Exactly. Now this Form S3 registers their potential plan to offer up to $1.5 billion in various securities sometime in the future.
Flexibility to raise capital from time to time.
Correct. It gives a broad overview of their business, the assets, and the types of securities they might offer. Details on specific offerings would come later.
For me, one of the most intriguing things is that potential restart of the SYU assets.
Absolutely.
Getting those pipelines back online and restarting production after that long shutdown since 2015, that feels like a really critical near-term catalyst to watch.
Agreed. That's probably top of mind for them. And don't forget those 100-plus potential undrilled locations.
Right. That hints at a much longer-term potential for growth beyond just restarting existing production.
Yeah, assuming they can develop them successfully. Lots of potential baked into those assets.
So for you, the learner, wanting to explore further, this S3 is a great starting point, but not the whole story.
Definitely check out their annual report on Form 10-K, filed March 17, 2025. That'll have way more background.
And keep an eye out for any future prospectus supplements if they actually launch an offering. That's where the specific deal terms will be.
And all these documents are publicly available on the SEC's ADGR database.
Yep, just go to www.saki.gov, search for Sable Offshore Corp.
It's really empowering to be able to access and understand these filings directly.
It really is. So here's a final thought to leave you with. Looking at these SEC filings gives you a real glimpse into a company's strategy and potential future moves. What part of Sable Offshore's story, their assets, or these potential offerings stands out most to you? Definitely something to mull over.
Good question to ponder.
Thanks for taking the deep dive with us today.